Welcome to the future of transportation. Tesla's long-awaited Robotaxi service has officially launched in Austin, Texas, marking a pivotal moment for autonomous driving. So, what does this mean for the future of the company, its competitors, and its stock? Let's dive in. So, on June 22nd, Tesla kicked off its Robotaxi service in Austin with a small fleet of 10 to 20 Model Y vehicles. Now, these are fully autonomous cars. They operate inside of a geofenced area, charge riders a flat fee of $4.20 per trip. Now, a safety monitor sits in the passenger seat, and the rides are invite only. So they're targeting Tesla enthusiasts as well as influencers. Early feedback seems to be smooth, safe, and impressive. One rider called it better than a human driver. Despite a cautious start, this launch is a proof of concept for Tesla's ambitious vision. Tesla's not stopping here. Elon Musk claims to scale rapidly, targeting cities like San Francisco and Los Angeles by year's end, with hundreds of thousands of robotaxis on the road by 2026. The robotaxi market is expected to soar $330 billion by 2030, and Tesla's high-volume EV production gives it a cost advantage over rivals like Waymo, which relies on pricier LiDAR systems. But scaling safety and navigation, that will be the key. So this could be a disruptor. Uber, for instance, its driver-based model could disrupt that. Analysts like BMO Capital believe Uber's international expansion and AV partners will keep it resilient for now. But here in the States, it's iffy. And here's where it gets better. Robotaxis aren't just for passengers. Imagine for a moment summoning a robotaxi to deliver your groceries as well, or even takeout. With AI optimizing routes and no driver costs, robotaxis could make same-day delivery both cheaper and greener. By 2030, autonomous delivery could be a $50 billion market. So picture this. You order dinner, and a Tesla robotaxi arrives with your meal. Guess what? No tip required. This alone redefines convenience, especially in urban areas, while reducing traffic and emissions. But public acceptance and, of course, regulatory hurdles still remain. Let's try to make some money from all this. Tesla stock surged 8% following the weekend rollout of robotaxis to $348.71, reflecting investor excitement. Analysts are bullish. Wedbush Dan Ives, well, he rates it as an outperform with a $500 target, while other analysts are above and below this target. But here's the outlier. Kathy Wood, yeah, you named it, predicts Tesla could hit $2,600 in a few years, driven by robotaxi margins, which are well over 80%. But the risks loom. Musk, well, he's had some political ties that have sparked backlash. Now, I believe the world's richest man will do it again. He has recently distanced himself and his company from the political world as now, and the heat's off of it. And with that, let's take the conservative outlook of $500 per share by the end of 2026, which is about a year and a half away. So we could buy the stock, but you're talking $350 a share right now. That's $35,000 for 100 shares. Let that sink in for a moment. And even with the price target of $500 and about a 30% yield from here, that's still a lot of money to throw at 100 shares of stock. Now, I'm not your investment advisor, and you could clearly buy less shares, but I want to do a comparison here for educational purposes. Let's compare the stock and our $500 price target to call options. A call option is the right to buy 100 shares of specified stock at a specified price for a specified period of time. Most call options are going to be much cheaper than owning the stock. But remember, it's a right. It's not ownership. And most option traders have no interest in owning the stock. Their interest lies in the leverage of the option and, of course, flipping the option for profit. Now, option traders would immediately look to buying calls because they're cheaper than owning the stock. However, with this much time premium going out beyond 2026, you're talking about calls that cost $85 each. That's about 20% of the price of owning the stock. No, I got a better idea. One that costs $500 or less, but still let you trade in Tesla and capture potential triple-digit returns. It's only one strategy I can think of. I call it the shotgun approach. otherwise known as the bull call spread. So, a bull call spread involves buying a lower strike call and selling a higher strike call across the same expiration, thereby offsetting both your cost and your risk on the trade. Looking out to January 2027, we can effectively place a trade on Tesla that looks like this: long the Tesla January 15th, 2027 480 call option, and short the Tesla January 15th 500 call option. Again, buy the lower, sell the higher. Right now, it's going off for about $400 per contract spread, which gives you a maximum risk of $400 and a maximum reward of, get this, $1,600. Here's what it looks like right from my Robinhood account. You can see all the details right here. So, in summary, Tesla's Robotaxi launch in Austin is just the beginning. From revolutionizing ride hailing to delivering your groceries, Tesla's autonomous future could reshape our lives and potentially your portfolio. So let me know your thoughts in the comments below and continue to like, share, and subscribe for more on the future of tech. Thanks for joining.